Hi guys, welcome back to another video. In today's video, I'm just going to explain the link between unemployment, inflation, interest rates, and currencies, which is important for us as traders to understand. Of course, you might not be a fundamental trader. You don't trade news, you don't trade fundamentals, you only trade based on technicals, which is good. I'm also a technical trader, but I'm 90% a technical trader and I leave 10% to understanding fundamentals. And unemployment, job creation is one of those fundamentals that you also need to pay attention to before you take a position as a trader on a currency. For example, we saw that the US economy grew by about 261 jobs in October, which is good. Unemployment rate, I think it became 3.7. But how does this all affect us as forex traders? That's where I am getting it. So what's the link between unemployment, inflation, and interest rates and currency movements? So what you want to understand is traditionally unemployment, the unemployment rate has always have an inverse correlation with inflation. When unemployment rises, you tend to see inflation going down. When unemployment drops, you tend to see inflation going up. And for some people, it might not make sense. So what will be happening? So when you get job creation, which means unemployment going down, it means more and more people are finding work, more and more people in that economy are actually employed, which means they are earning an income. And if they are earning an income, it means there is a lot of disposable money in the economy, which tends to drive prices up because people have got buying power, because people are going to work. So when unemployment drops, inflation goes up because more people are actually affording to buy things, so they are creating demand for things, and demand creates or increases prices. And when you also see unemployment increasing, it means less people are going to work, which means fewer people or fewer households actually have money to spend buying things, which means there is lower demand for goods and services, which means then if there is no demand for goods and services, prices tend to drop. So that's the immediate correlation between unemployment and inflation. They traditionally enjoy a negative or inverse correlation, if you understand forex lingo, correlations, inverse correlations and stuff like that. So how does that affect us as traders? Now when inflation is increasing, because what? Because unemployment is going down, it means that there is a likelihood of the central bank or the Federal Reserve actually also increasing interest rates. If I'm speaking too fast, you can rewind the video and watch it over again, but I'm trying to be as simple as possible. So since around 1992, most major economies, central banks, including the Federal Reserve in the US, have tried to intervene in managing inflation in their economies. So you hear about inflation targets in the news. What it means is central banks across the world, they have two targets: an upper target for inflation and a lower target for inflation. They try to keep it within those bounds, but most of the time, or sometimes, inflation actually increases higher than the target, or it drops lower than the target. Then in that scenario, the central bank has to intervene. If inflation is higher than the target, the central bank now has to what? To increase interest rates as a way of trying to manage inflation. Now, if inflation drops below their target, they are forced to what? To cut interest rates. That's how it works. And then what it means now when we are looking at interest rates is interest rates affect a currency's strength or weakness, because if a central bank or the Federal Reserve increases interest rates, they are making it attractive for buyers of that currency to buy that currency and hold it and make money off the interest. So they are creating demand for that interest or for that currency, actually, by raising interest rates. And by lowering interest rates, they are actually creating flooding the market with that currency, because now people are selling because there is no more money to be made by buying that currency. So it starts with what? With unemployment. If you see unemployment increasing, likely inflation is going to go down. If you see unemployment going down, likely inflation is going to go up. And if inflation goes up beyond the central banks or the Federal Reserve's targets, they are going to raise interest rates. And if inflation drops below the central bank's target or the Federal Reserve's target, they are going to cut interest rates. Now traders want to make money off that interest. So if they hear that or suspect that there's going to be a rise in interest rates, they are going to start buying that currency. They are going to buy that currency, which in turn drives that currency up, because people are just buying that currency, like what people have been doing with the dollar. They've just been buying the dollar. That's why the dollar has just been so strong, because people want to make money off the interest of holding the US dollar. Now, if the Federal Reserve were to cut interest rates, the dollar will no longer be as attractive to speculators, so they will start selling the dollar, and the price of the dollar will actually start dropping, because now people have no more interest in it, because they are just now starting to sell it. Now that actually gives you an idea as a forex trader, just by watching unemployment rates and watching inflation rates and watching interest rates, which positions you probably need to be taking on a currency in the long term. For example, like myself, I trade the dollar pairs mostly. So the moment I hear the Federal Reserve is likely going to increase interest rates, then definitely I know I'm going to be buying my dollar based pairs, and I'm going to be selling my pairs like Euro USD, GBP USD and stuff like that, because the dollar will likely garner strength from people just starting to buy the dollar, hoping to make money off the interest rates. So I hope this quick video is helpful to somebody. I do trade mostly technicals, but I also pay attention to fundamentals. And somebody had asked me about this, a trader friend of mine, and I thought, let me just put it in a video and also probably help somebody out there. If you found this video helpful, like the video, subscribe. I'll see you in the next one. Bye.
the hell's wrong with me? I don't get along with anybody, honestly. I've been living in my own head constantly. Thoughts jumbled round, think I need a new lobotomy. Wait, all these thoughts are too negative. I don't wanna get lost in the sedative. Gotta show 'em what I got